We were dead wrong expecting Musk and team to step up like adults in the room and give a strategic and financial overview. Instead, we got a high-level Tesla long-term view with another train wreck of a conference call.
If you could describe Tesla's recent earnings call in one word, what would it be? A disaster or an opportunity? Tesla's been facing a lot of criticism since its Q4 2023 earnings call, which, with its stock looking like it's on its longest streak for losing since 2016. For any investor, this can be quite devastating. But what does it really have to say about Tesla and the way it conducts its business? What is really going on here? Should investors be seeing Tesla's current market position in a more positive light? Join us as we find out the answers to these interesting questions.
Okay, as a firm believer then, what does it do to you that Elon Musk came out and basically said, I don't care if this company makes money. I mean, I'm paraphrasing, but he said, I'm not looking for additional economics, read more money. I just want to be an effective steward of very powerful technology. Does that bother you?
Look, I think in some ways the autonomous is going to be super powerful. And I think even what we saw with OpenAI and Altman, I mean, there's definitely a lot of unintended consequences here. I do believe in Dojo, Optimus. I could argue the value going forward from AI is much more than the EV and the actual value today of Tesla. But for Musk right now to kind of exert that, it's agita, it's Harper. It's the last thing as a bull you want to hear, and it does sort of put gasoline on the fire a little, and that's not what you wanted to hear last night. And it goes back to you needed an adult in the room last night, and instead it felt more preschool type conference call.
Isn't this the cost, though, of doing business and investing in a company with someone like Elon Musk at the helm?
Yes and no. I mean, for investors like that, we've seen it for a decade, right? And you understand you take the good with the bad. But now, at this point, this was a huge period to sort of walk investors through, give some goalposts. Zach, CFO, with him gone, definitely feels a different type of conference call that we're seeing. And as long-term believers in the story, we remain that in terms on the other side. But in the near term, the bears won, and it's hard to defend. And that's why you're going to see pressure on the stock today, with 2024 being a trough year in terms of margins.
As a long-term believer of Tesla, Elon Musk also said last night that China will pretty much demolish most other car companies in the world. How are you looking at the space overall? He's basically setting Tesla up to be taken over.
Well, I think it's really Tesla and the Chinese EV players, because the price war that's happening, it's a Game of Thrones price war that's happening in Beijing. You're seeing it. I think that was the right strategic move in 2023. 2024, you can't continue to go down that path. At one point, you got to hold serve. And as much as we talk about FSD and everything else, for now, it's about, do you continue to cut prices? We thought 95% were done. We were dead wrong going into that conference call. That was a wrong call. Now it's defending, as a bull in terms of the long-term story.
The recent events surrounding Tesla's latest earnings report has painted a picture of doom for the pioneering EV maker. The company witnessed an 8% drop in its stock, which was following the release of its latest financials, sparking widespread speculation about the end of Tesla's dominance in the EV sector. This video takes a broad look into the facts behind this frenzy, dissecting the earnings report and what it truly signifies for Tesla's future. Today's latest Tesla's earnings report could be viewed in two ways. On one hand, it can be described as a tale of downfall, and on the other hand, a golden opportunity, at least for discerning investors. We're also going to explore both viewpoints in the course of this video, so keep an eye out and don't forget to keep watching to find out on all the details. But let's also take a look at the standpoints which are critical to evaluate, irrespective of whether or not you're a bullish investor. So, even as we maintain a bullish stance on Tesla, it is important to pay attention to the company's current scenario. Let's dive in.
We were dead wrong expecting Musk and team to step up like adults in the room and give a strategic and financial overview. Instead, we got a high-level Tesla long-term view with another train wreck of a conference call. Dan Ives, not holding back, he joins us around the table. Dan, good morning to you.
No, great to be here.
You sound disappointed.
Look, I mean, this was an important call where Musk and the rest of the team needed to step up, adults in the room, give some guidance in terms of what's happening on pricing, the margin pressure, strategically. And yeah, I'd say train wreck would probably be soft, because this was one where the long-term story is intact, but in the near term, they needed to navigate, communicate. They didn't do that. You'll see a lot of pressure on the stock.
A dreadful assessment. Stock is lower by something like 7% in the pre-market. Have you changed your call on the name?
Look, I mean, we're still bullish, but from a fair value perspective, I mean, 350 goes toward probably lower threes, 3 to 315. From a base perspective, because numbers are going to come down. And the biggest issue here is that you didn't give goalposts. Because by not giving goalposts now, the Bears are going to run with it. And look, the Bears won last night. The long-term story is intact in terms of FSD, in terms of if you're a believer in EV, which we are, $1 trillion market cap, I do believe is on the horizon in the next few years. But in the near term, I mean, this is one where it's a glass half empty relative to how they talked about it. I mean, this was sort of a 101, how to do a conference call.
I want to understand what the threshold is for you to say sell. Because we have Elon Musk, who just said, as you said, a train wreck of a conference call, was not the adult in the room. He wants 25% of Tesla, or else he's going to walk and go develop some sort of robotics company. If he gets 25% of Tesla's shares, do you say sell?
Look, I think, first of all, I view that as sort of impossible here. There's not going to be a dual-class situation from a share perspective. Plus, he did sell. He had 22% ownership before buying Twitter. So part of that, in terms of the board will have some sort of comp package. Right now, it's caught in a legal issue in terms of Delaware. But I think if he gets more voting control, that's something that's going to ruffle feathers. But also the problem here is that the plane's crashing in the near term, and you're talking about salted or unsalted pretzels. And that's the biggest problem relative to what's happening in Tesla, is that investors want to have some guidance, give me some financial parameters, and you didn't get it. And look, and obviously we're huge firm believers, and that's the frustration.
Well,
the first idea takes a deep dive into the facts, figures, and potential that Tesla still holds within its innovative grasp. The recent Tesla earnings report has been the subject of much debate, with a particular focus on the misses in terms of both top-line revenue and bottom-line EPS. The company reported an EPS of 71 cents versus the 74 cents expected, and a revenue of about $25.1 billion against the anticipated $25.6 billion. At first glance, these figures seem disappointing, but a deeper analysis is necessary to understand their true impact. Hey guys, welcome back to Tesla Tomorrow. Disappointing, no doubt, but have you maybe just thought that Tesla's earnings report is more than just numbers? While the slight misses in earnings and revenue have caused some significant market reactions, it's crucial to put these numbers into context. In the fast-evolving world of EVs, where innovation and market expansion are key, these numbers don't necessarily spell disaster. Rather, they could be indicative of Tesla's strategic choices, with things like price adjustments and investments in future growth areas. Before we carry on though, if you like this type of content, hit that like button, subscribe and turn on post notifications to keep up to date on everything going on with Tesla. One of the critical points discussed during Tesla's Q4 report was the automaker's operating margins, with a considerable drop in them from 16% last year to 8.2% this quarter. But while the numbers do seem alarming, it's important to note that it is an improvement from the previous quarter's 7.5%. In fact, these fluctuations are not unusual in a company that's continuously innovating and adjusting its marketing strategy. The decrease in margins is also as a result of Tesla's aggressive pricing strategies to outcompete rivals and thus boost sales. Despite these lower margins, Tesla's operating margin remains impressive, especially when compared to other auto manufacturers.
Yes, well, I'd say, overall, I think Elon is a lot more cautious than he has been in the past with his forecasts. I mean, he said it on the call that he has been really optimistic with timelines. And honestly, who can blame him? Because I think humans in general are pretty bad at predicting AI progress. But yes, we heard that they can start production next year on the next generation vehicle platform. I think there's a lot of cause for optimism in what they said around margins. So we saw automotive gross margins, ex credits tick up in the quarter. We did hear that, one, they're cutting costs on a per car basis in a way that's really unprecedented in the auto industry. And they also said that even though, on their current vehicle platforms, they're sort of reaching the limits of that cost reduction, that doesn't mean that they're done, right? So we heard on the design side, as commodity prices that flows through to the underlying cost of the vehicle. That takes some time. So there's still optimism there, and I think that's amazing. I mean, when you look at EVs as a whole, traditional automakers are cutting back on their electric vehicle platforms. I mean, that's a bad idea because EVs are already cost competitive with gas-powered cars. And guess what? It's only going to get cheaper. So this is the future, and Tesla is the leader there.
While we do want to stick to the positive sides of this event, it is important to acknowledge the bitter truths about Tesla's latest earnings and what its overall future looks like. Elon Musk is a figure synonymous with unpredictability, often influencing public and market perception of Tesla. His statements and actions have a profound effect, as seen in the aftermath of the earnings report. The market's reaction to Tesla's guidance for the future, particularly concerning upcoming projects and innovations, has been pretty mixed, largely due to Musk's enigmatic nature. Also, Tesla has said that 2024 might not be as strong as last year, a statement that has caused panic among investors. Elon Musk's role in shaping Tesla's story cannot be overstated. His conventional and unconventional approaches and visionary ideas have all been key drivers to Tesla's success. However, they also contribute to the company's volatile market position. And while Musk's unpredictability is a component of Tesla's innovative spirit, it's also a source of market nervousness and uncertainty.
Tesla shares moving lower this morning. Fourth quarter revenue and profits fell short of expectations, and the company says that vehicle volume growth will be, in their words, notably lower in 2024 compared to last year. Joining us right now is Colin Langan. He is Wells Fargo equity analyst. And does this come as a surprise to you because the street is selling the stock down today?
I mean, I think yesterday we got a bit of a trifecta of bad news. You have the comment on deliveries. I don't think that was as surprising. I mean, we kind of could see demand has been slowing a bit. I think the margin commentary was a bit of a surprise. They talked about sort of hitting a natural curve limit on bringing costs down. It's a big problem because they just cut pricing in China and Europe a couple weeks ago. So if you can't bring costs down, those pricing just hits your margin right away. So it feels like margins are going to come down next year, very likely. And then he also didn't back away from the comment about trying to get a 25% stake, which raises concerns about dilution if you're a shareholder here.
What do you think in terms of whether it's more important to have not get diluted, or to have Elon Musk there developing AI at Tesla? How would you come down on that?
I mean, the stock trades where it does because you're not paying for the core auto business, you're paying for the future ideas, and that is Elon Musk. But it would be pretty frustrating, I think, as a shareholder to, have to sort of dilute yourself to keep him around.
You've got a hold on the stock right now. 190 is where it's trading. In terms of the other big automakers, though, you like them less. Ford and GM, you have a sell on both of those stocks. Why?
I mean, I think the traditional auto, the industry is challenged right now. I think even what Tesla's talking about is, right, their demand is slowing, pricing's probably coming down. Those effects are going to affect the Detroit 3 as well. They just haven't seen it as much. So I think we have pricing headwinds. We have capacity has grown way too much, partly because of all the capacity Tesla has added. And we have EV regulation issues for the traditional guys. So they're going to have to figure out a way of trying to maintain margins as they sell more unprofitable EVs, which is just a structural challenge for them that I don't think they're going to be able to meet.
That's a pretty bleak outlook. What would change your mind? Is there anything that could happen over the course of this year that would make you think, okay, maybe there's a time to look at it again?
I mean, valuation always matters, obviously. I also think, we'll have to see how the politics shake out. I mean, I think if you have a Republican, there's more likely some of the aggressive EPA legislation gets pushed out. I still think that's a problem through 2026, but I'd obviously be less bleak beyond that, because I think the 2026 rules are probably largely intact.
So the big three can fall back on selling some SUVs, some regular internal combustion SUVs, and pare back on their EVs when things are crappy. Tesla has that's it, right? Well, they only have, they can't fall back on a legacy business. They've only got, I mean, I guess that we always knew that, but I never thought that could be a positive for the big three, that they can always.
It is fair to say that the market's reaction to Tesla's earnings and future guidance is justified. However, we won't fail to highlight the golden opportunity in all of this, which may be presented to Tesla investors. While initial responses have leaned towards pessimism, a closer look reveals a company gearing up for significant advancements. Tesla's focus on innovation and expansion, despite short-term financial forecasts, underscores its commitment to retaining a leading position in the EV market. The automaker is currently channeling its resources into the development of next-generation vehicles and the expansion of manufacturing capabilities. This foresight is often overshadowed by immediate market reactions, but it is indicative of Tesla's long-term strategic planning. Although not everyone may have realized this, Tesla may also be set to expand its horizon, and it could low-key be making strategic moves into new markets. Tesla's vision extends far beyond current achievements. It's laying the groundwork for entering new market segments, which could refine its future trajectory. The focus is on two key areas: the first anticipated Cybertruck and the development of an affordable $25,000 sedan. First up, Cybertruck, the game-changer for Tesla in the making. Cybertruck, with its unconventional design and impressive range, has been the topic of heated debate. The truck's entry into the pickup truck market, a segment Tesla's yet to tap into, opens up enormous potential, and it is a move that significantly bolsters Tesla's market share, tapping into a segment that enjoys strong demand, especially in North America. And while critics may have their reservations, Tesla is known for turning skepticism into awe. Second is the $25,000 sedan, Tesla's remarkable EV aimed at making EVs accessible to many. The development of a $25,000 sedan could pass as Tesla's most groundbreaking venture from Tesla of all time. The vehicle aims to make EVs more accessible to a broader audience, a stride towards mass adoption of EVs. By competing in this category, Tesla's not only expanding its production lines but also contributing to a larger environmental cause by making sustainable transportation affordable.
The first manufacturing location for this will be at our Gigafactory and headquarters in Austin, Texas. And then we'll follow that up with other locations around the world. Probably the factory we'll build in Mexico will be second, and then we'll be looking to identify a third location, perhaps by the end of this year or early next, outside of North America.
Left unsaid during the conference call was the fact that the EV market overall, for all automakers, it is slowing down in terms of the rate of growth relative to what we saw in 2023. It's still growing, just not as quickly. Tesla finished 23 number one in global EV sales, but in the fourth quarter, it was topped by BYD out of China. And during the call, Elon Musk talked not just about Chinese EV companies, but Chinese automakers overall, and the fact that they are expanding rapidly around the world. They're very good. And if the world, in terms of countries, are not prepared with trade restrictions, that the Chinese are going to demolish. And that's the word that Elon Musk used, demolish the competition. Quickly take a look at shares of Tesla over the last year. The energy storage business, a bright spot in the report, up 30% year over year. But there really wasn't a whole lot to like in this, guys, largely because of how vague they are about vehicle deliveries happening in 2024. How much are they going to grow?
I mean, I guess that's better than making numbers up when it's a pretty hazy outlook. Phil, we were just talking about it off camera. Joe was making the point that if you can't move Teslas, it just is indicative of the EV market overall. You saw some huge growth, some pushes behind it, but this is going to be a very different year for everybody.
Interestingly, Tesla's ambitions are not limited to automobiles. The company's actively exploring other domains too, like robotics and energy solutions. These ventures are also poised to complement Tesla's automotive business, creating an ecosystem of products that services could be laid out in the future for, with other things further solidifying its market dominance. Looking at the bigger picture, we think that the future of Tesla looks promising, with an expansion into segments and continuous innovation. By targeting both the high and more affordable ends of the market, Tesla is poised to capture a broader customer base. The company's ventures into robotics also are a big vision that transcends the automotive industry as a whole, potentially revolutionizing multiple sectors. Tesla's journey reflects a company that is resilient, forward-thinking, and financially sound. For long-term investors who can weather the short-term market volatilities, Tesla offers an opportunity to be a part of a company that is shaping the future of transportation and beyond. With short-term challenges, which have sparked up debates, the company's robust financial health, strategic expansion into new markets, and visionary leadership under Elon Musk position it for a continued success. And so, for seasoned investors and enthusiasts alike, Tesla represents not just an automotive company, but a beacon of progress in technology and sustainability. As the car company navigates the ever-evolving landscape of electric vehicles and beyond, it continues to offer a unique blend of challenges and opportunities, underscoring its role as a key player in shaping the future. Overall, while Tesla's latest earnings report did not meet market expectations, it is not a defining indicator of failure. Instead, it reflects a company in the midst of strategic shifts and investments for long-term dominance. Therefore, the slight misses in earnings and revenue should be viewed in the broader context of things, along with Tesla's overall growth trajectory and ambitious future plans. But what do you think? Let us know down below. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.